Okay, in today's video I want to talk a little bit about timing cycles. Now, if you get a cluster of timing cycles, you look for a reversal of whatever the market's doing into those cycles. Okay? It doesn't always produce a change in trend. That's another thing that you need to know about the cycles. I'm going to give it about maybe 65% odds if you get a trigger that tells you that it's worth placing a bet. Okay, so obviously it's nowhere near 100%. But I will tell you that the last time that I was looking at cycles for a high, we only saw a minor pullback. Okay, and it had a lot to do with the fact that we had, you know, this 12 days up, 13 days up, 11 days up, and then at this point it was 13 days up. Okay, now did we see a pullback? Yes, but it was micro. So that really didn't kick in for much at all. But as far as the current cycles, or the most recent cycles after that last grouping, they came in pretty much the 24th through the 27th. This is a daily chart of S&P cash. And, you know, here's where they come from. We had a low to low, 786 on the 24th. We had, let's see, a high to a high from another high. That came in on the 27th. We had another swing here. I believe this was the low to the high, projected from the low. That came in on the 25th. Yeah, so this was the 18 bars up versus 18 bars up. We also had, let's see, high to low, 1618 in time of that high to low swing. Also came in on the 25th. And then we had this other cycle on the 27th. That's where that first grouping came from. So the actual high was made on the 25th, and we are starting to see at least a little bit of a pullback. But there's a difference between what you know with this work versus what you don't know. Now, what you knew was that we had timing for a possible high. What we also knew was that we had met minimum targets off of this last low because we had met the 1272 extension. And then there were also some other, you know, projections that gave us some resistance right around this area. So when you have time and price resistance that comes together, one of the things that you want to do is, if you are long, is you ratchet up your stops, because you're definitely in a place where we could get a deeper downside correction. So you would have been stopped out. Now, the other thing that you can do if you are shorter term oriented and you're okay with what would be considered a counter trend trade, you can also look to trade it for some lower prices using the shorter term data. I just don't recommend that for newbies, because you have to be super nimble for counter trend trades. Okay, and then also you have to watch for the support on the way down for your next decision, because what this work tells you is that yes, there were sell triggers at time and price resistance, but it doesn't tell you how far down it's going to go. It's possible that we see a decline that might be similar to some of these prior larger declines. 122.87, this one was 99.48. Okay, does that mean that's definitely going to happen the same way? No. So we don't know. So what you have to do is, you know, if you took a short against this resistance, is to just trail a stop down as you go. I will also be watching, since the larger pattern is still a bullish pattern, I'm going to be watching multiple support decisions on the way down to look for a re-entry on the buy side. I may not get a signal against those zones, but I am going to anticipate that possibility just due to this larger pattern. Anyway, I'm not sure if all of that made sense, because I gave you a lot of information there, but you know, this is what we're watching. I'm considering this a key and pivotal high because it was made at time and price. And then in the coming sessions, I'm going to be monitoring especially the support that comes in above this prior swing low for a possible re-entry on the buy side.